Hello, my fellow Extraordinary Americans. I'm Cosmos Dar, and this is Extraordinary America. What is Extraordinary America about? You see, American identity is about freedom, the opportunity for a better life, and the pursuit of happiness. Welcome to Extraordinary America. Today's guest, we have Kevin Gutman. Kevin is a senior mortgage broker, reverse mortgage specialist, and 4 times Amazon best-selling author, including the book A Reverse Mortgage Changed My Life. He brings a wealth of knowledge, integrity, and a people's first approach to the world of senior home financing. With a deep commitment to helping senior homeowners understand their options, Kevin focuses on simplifying the home loan process while prioritizing transparency and convenience. With over 21 years of experience in mortgages, reverse mortgages, and real estate investments, Kevin offers actionable insights and relatable stories that resonate well with seniors and their families. As one of only 218 certified reverse mortgage professionals in the country, Kevin has over 100 5-star reviews and an A-plus rating from the Better Business Bureau. He's a proud member of the National Association of Mortgage Brokers and the National Reverse Mortgage Lenders Association. His background includes growing up in a real estate family, earning 3 master's degrees, and a strong track record of client referrals and repeat business, which make up 85% of his work. He's an extraordinary American, and I'm glad to have him on the show. Kevin, are you there?
Hi, Cosmos. Thanks for having me today.
Thank you so much for taking the time to come on the show, Kevin. Kevin, can you tell me and the audience a little bit more about yourself, your story, your background, and how you got started in this industry?
Yeah, that's a great question. So I grew up in Southern California, right near Disneyland, and my dad was a realtor, an investor, and then he also trained new real estate agents. So I grew up around real estate my whole life, and my dad taught me a lot about real estate and a lot about people. He retired at age 48 from his investments. He had cash flow from 20 rental properties. He didn't need to work anymore. And I just thought, wow, real estate's a powerful wealth builder. And so when I started my career, I worked in the nonprofit sector. I used to travel around the country and around the world and raise money for people in the developing world to have clean water, medical clinics, schools, small business loans, etc. Just trying to make their lives better. And it was very rewarding work. And I did it for 12 years. But my wife and I have 5 children. And I was just traveling too much. I was gone about half the time. Needed to be home more to be with the family. And so I left that. My wife also has a real estate background. So we started flipping houses and ultimately got into the mortgage industry 21 years ago. So there you go.
Wow. So, like the mortgage industry, like everybody, like most people that have a home end up like they have to pay mortgages. So this is actually a very interesting topic, Kevin. But what I wanted to ask you is like from your perspective, what is the most common theme or issue you find among people paying mortgages, like a common mistake that they have like they can avoid that'll help them save money when it comes to mortgages for their homes?
Yeah. When people, especially when they get their first mortgage, it's very intimidating and very daunting because they don't know what that criteria is to qualify for. They're not sure who to talk to or what programs are out there. And so I prefer the mortgage broker side. I've been a mortgage banker in the past, but the last several years I've been a mortgage broker. Here's why. Because mortgage brokers can shop. In our case, our company has over 100 lenders that we can shop for people. So we have every program imaginable. The banks that I worked at tend to have vanilla programs. They're kind of cookie cutter programs. And also what I found out when I came to the broker side is when you work with a broker, it saves you over $10,000 over the life of the loan because we tend to have better rates and better fees than traditional retail lenders or banks. So I would encourage somebody if they're looking to get a mortgage to hunt out a reverse, not a, we're going to talk about reverse mortgage in a minute, but to hunt out and find a mortgage broker to help them. I think they'll be better served in the long run.
So Kevin, just to like elaborate so that the audience can understand this more, like most people, they tend to go to banks to get like a mortgage, right? So from your perspective, like what makes your solution better, and how so, like from like a financial standpoint?
Yeah. So, a bank has their product, right? They only have limited products. A broker has every product out there. So, and then we have lenders competing for business. So that bank only has their products and only has their fees or their offerings. A broker has hundreds of options for people that they can shop to help them get the best interest rate, pay the lowest fees, get the best mortgage payment. So, and mortgage brokers are all over the country and they're easy to find. We have about 27% of the market right now as mortgage brokers. And the research, there's an independent study that was just done, Cosmos, and proved that working with a broker saves people over $10,000 over the life of the loan.
Wow. I mean, yeah, like a lot of people, like they just want to know how to save money on mortgages because like they have to do it for like a 25, 30-year period, and it can get like taxed. It's almost like they're now stuck for the foreseeable future with that, you know?
So here's a couple tips that your listeners might benefit from. If they want to pay it off faster, there's two things anybody can do that are very easy. One is to pay the mortgage every 2 weeks. So let's say it's a $2,000 a month mortgage. Every 2 weeks, you pay $1,000. And what ends up happening is you pay an extra payment in a year because it's 26 payments bi-weekly instead
Mhm.
of one payment a month. So you end up paying 13 payments ultimately instead of 12. So that saves 7 years on a 30-year mortgage just doing that. The other thing they can do is they can add money to principal. So let's say in our example, somebody adds $100, $50 per payment to their mortgage payment for principal. That's going to shave another few years off. So now they've taken a 30-year note and they cut it down to 20. And people say, yeah, but I'm not going to live there 30 years. But even when you sell, you have more equity because you've paid your mortgage down faster. So the
Mhm.
idea is to get rid of debt as fast as possible and to use leverage, obviously, to get into the house, but then pay it off as fast as possible. And those are two strategies that may help your listeners.
Well, Kevin, that's amazing that you mentioned that. But I wanted to elaborate on the part about paying on the principal, because a lot of times, like when the banks like are doing like collecting money for the mortgage, they take the money and put it on the interest. Correct me if I'm wrong, right? So how do you make sure that the principal is paid off versus the money that you're putting in being paid off for the interest?
So what I encourage people to do, if they still write checks, which not a lot of people do, but you would write two checks, one for the payment, one for principal. If you do it online, you'd make two transactions, one for the payment, one for the principal. And then in the memo part, you just write apply to principal. And that way the mortgage company is instructed to apply it to the principal only, not to interest.
Kevin, I'm really appreciative that you're mentioning this detail, because a lot of people that are there out there that they do not know that they can actually do that, and they end up paying like they just make the payment, and it's just like it usually goes to interest. So I'm glad that you're mentioning that.
Absolutely.
So Kevin, can you tell me and the audience a little bit more about what a reverse mortgage is?
Yeah. Reverse mortgages have been around since 1961. There was a widow back east and she lost her husband. She could no longer afford to make her mortgage payment. She had a lot of equity and she knew the local banker because her husband was a football coach. The banker played football for her husband. And so the banker went to his bank and said, listen, I know this family, this woman can't stay in her house unless we suspend her mortgage payments, allow her to remain in her home, but not have a mortgage payment. We take payments from her equity each month. And so that's what they did. And so the very first reverse mortgage was born in 1961. And Cosmos, for 27 years, the industry was not regulated. It was kind of like the Wild West. There was a lot of versions of a reverse mortgage. And honestly, some people got taken advantage of. Some people lost their homes, they got foreclosed on. And so in 1988, President Reagan, with Congress, passed the Home Equity Conversion Mortgage Bill, HECM. And they made it a trial bill for 10 years just to see if it would help a senior remain in their home, retain title of ownership, maintain their independence, entertain the lifestyle they've dreamed of, and gain access to their equity. And after 10 years, they made the bill permanent. And by the way, over 1 million people, 1.2 million people have taken advantage of a reverse mortgage since 1989 when the first one was taken out. And AARP surveyed people with a reverse mortgage and found that 94% were satisfied or very satisfied with what the program was designed to do. And over the years, they've improved it and actually made it safer. It's probably the safest loan somebody can get out there. And I can talk about the safeguards if you'd like. But anyway, when the government's involved, it's a good news, bad news scenario. The good news is they're going to protect people, especially seniors. The bad news is there's a little more paperwork and red tape involved. But ultimately, it's a tremendous product for the right person.
So, Kevin, what do you think does Dave Ramsey get right or wrong when it comes to reverse mortgages? Because I know there's a lot of people that talk about this stuff, but like, what is the real deal about this?
Yeah, Dave Ramsey's helped a lot of people understand finance and budgeting and debt snowball, helping people pay off their debt faster. Helped a lot of people with that. But he's misinformed, misguided when it comes to reverse mortgages. There's a YouTube clip out there with him going on a rant about a 92-year-old man in Chicago who's going to lose his house because he has a reverse mortgage. Well, the truth is, Cosmos, the man didn't pay his property taxes. And whether you have a mortgage or no mortgage or a reverse mortgage, if you don't pay the property taxes, they're going to foreclose on your house.
Hmm.
And so that's just some misinformation out there that he's misinforming people about how they work. And then another one out there, I don't know if you know Susie Orman, but she's also not for them. And Susie recommends people take out a home equity line of credit or a HELOC. And
Hmm.
the thing about a HELOC is it's only a 10-year draw period. A reverse mortgage has a 150-year life period. Um, there's mandatory monthly payments with a HELOC. There's no payment with a reverse mortgage. The loan has to be repaid by the borrower. With a reverse mortgage, it's a non-recourse loan. And what that means is the only recourse the lender has is against the sale or refinance of the house. They can't go to the borrower, their estate, or their heirs to get any of the money back. And then finally, a HELOC can be frozen, reduced, or full payment demanded. None of that can happen with a reverse mortgage line of credit. So you hope that these media moguls or media magnets would be more informed when they come out and comment on things, but specifically with the reverse mortgage, they're both off base.
So Kevin, like there's a lot of people out there on the internet and the media that talk about finance and mortgage and real estate and all of that. And as you just mentioned, like there's a lot of misinformation. So from your perspective, for the sake of the audience and the listeners that are looking at this, where should they go about getting accurate and correct information about this subject?
Yeah, that's a great question. 2021, there was 422,000 mortgage originators in the country, 422. This year, there's 155,000. So we've lost about 60%. The challenge with that is less than 1% do reverse mortgages. So you would think a mortgage is a mortgage is a mortgage, but reverse mortgages are very different. And last year alone, I had several people call me and say, I started with another loan officer, another company. They didn't know what they were doing. I found you online and I'm switching to you because you really do want to work with somebody who's trained in reverse mortgages. I always say you don't want somebody practicing on you, right? Because they're complex and they can take extra time if somebody doesn't know what they're doing. There's different documentation we collect, fewer documents actually. Credit score doesn't matter. Credit history does. There's just different things that are different with a reverse mortgage. In fact, I'll mention this now. There's a listeners may want to grab My website is reversemortgagerevolution.com. And there's a reverse mortgage consumer guide that I've written. They can download it and read it. It compares traditional mortgages with reverse mortgages. It compares HELOCs with reverse mortgage lines of credit. It compares jumbo mortgages, 1 million and up, to traditional reverse mortgages. It talks about the myths, FAQ. It's just a very robust document that answers a lot of questions, and that may benefit your listeners as well.
I would definitely recommend my listeners to definitely look at your website and look at this guide because you see a lot of people want to know how to pay off their mortgages quicker and save money. So this is definitely valuable information. I appreciate having you come on the show to explain all of this.
My pleasure.
So Kevin, in addition to reverse mortgage, I wanted to ask you about what is a retirement mortgage and how does that work exactly? Because you know a lot of seniors, they're basically going into retirement and they have to manage their budget and all of that. You know?
Yeah. So, Cosmos, there's only one loan in the whole country that doesn't require repayment, and there's no payment due each month. And that's a reverse mortgage, or sometimes we call it a retirement mortgage. And how much somebody can borrow, this is maybe some information your listeners might want to know. And they might have parents that could benefit from this information too. How much somebody can borrow is based on their age, the value of their home, and the interest rates. And interest rates mirror conventional 30-year interest rates right now. They're in the mid to high sixes in 2024, March of 2025, sorry. And one other thing you asked, and I want to be sure to circle back to this. If somebody really wants to work with an expert when it comes to reverse mortgages, there's a designation that about 220 of us have called the Certified Reverse Mortgage Professional, CRMP designation. And what that means, it's issued by National Reverse Mortgage Lenders Association. What it means is to sit for the test, we've been doing reverse mortgages long enough. We've passed a rigorous exam that only 25% of people pass. We commit to a code of ethics from NRMLA, and we commit to continuing education. So we're current with the industry. And like I said, it's kind of like finding a needle in a haystack because less than 1% of mortgage originators do these. And then you've got a subset of only 220 that really know the program inside and out. But it's worth looking into, and it's worth finding somebody who knows what they're doing because it'll save you time and money.
No, yeah, Kevin. I mean, it's definitely relevant. And one of the things I wanted to ask, for the sake of like, in addition to this, was what kind of strategies do you recommend to like boost like your buying power in order to like buy a home? Because I know like a lot of people like they want to buy a home, but they don't know how to go about doing that.
Yeah. So on the traditional mortgage side, there's grants available. We have one of our lenders that offers up to 15,000 in grant money um, if you qualify. On the reverse side, there's three ways somebody can use a reverse mortgage: eliminate their monthly mortgage payment, access their equity if they own the house outright or have a lot of equity, or three, increase their purchasing power when buying another home. So specifically, let me speak to that because that was your question. Let's say somebody's lived in their home for several years, raised their family there, but now it doesn't suit them anymore. It's too big to clean or maintain. They have stairs that are hard to go up and down. Maybe it's too much maintenance or deferred maintenance. So they can sell their home, take that equity, make one large down payment, get a newer home in the part of town they want to live in with updated amenities, no deferred maintenance, and increase their buying power by about 35 to 45% by using a reverse mortgage. It's called a HECM for purchase. And that's a strategy I help a lot of my clients do because we often hear, I can't afford to move. But when they realize they can increase their purchasing power, make one large down payment, not have a monthly payment, it's a game changer.
Wow, I mean, like that is a very interesting strategy because like I don't think people have like actually like considered it that way. So like I have a question. So like if this is how is it that more people are not doing these strategies out of curiosity? Because this is like very pragmatic and practical stuff that people should be doing, you know?
I agree. Usually the response I get is, this sounds too good to be true. And what I say, it's not too good to be true, but it is too good to be free. And what does that mean? This is the most expensive loan somebody can ever get, because Cosmos, these are FHA mortgages. Every FHA loan has mortgage insurance. In this case, the mortgage insurance protects the lender. They're insured that they're going to get all their money. But it also protects the borrower because they don't have to pay the money back. It's a non-recourse loan. The only recourse the lender has is against the sale or refinance of the house. But you pay for that. It's 2% upfront of the value of the home. So if somebody has a $400,000 home, they're paying 2% of that. That's $8,000 tacked onto the normal closing costs. So people say, well, it's expensive. And I say, well, it is expensive, but it also does what no other mortgage can do. No mortgage payment, don't have to pay it back, can access your equity, etc. So that's one of the downsides, people need to know is it's costly. Most of the costs can be rolled into the loan. There's only a few things somebody has to pay for out of pocket, and they're small. But for the most part, they roll in the fees and they don't have to pay that out of pocket. But that is something we hear is, it sounds too good to be true. Why aren't more people doing it? We referenced earlier about some of the gurus out there that are turning people away from them when they actually can benefit from them. So I always tell people, look, do your own research, look into it yourself, find out if it's a good fit for you. Here's who it's designed for. Somebody that doesn't want to move, they want to age in place. Somebody that doesn't want a mortgage payment or wants to access their equity. Somebody that wants to do stuff and they don't want to tap into their assets, their investments. They want to help their kids or their grandkids, or they want to buy another home, another business, or they want to travel, they want to give to charity. It's unlimited what people can do, which is why I wrote my book, because it's stories about how people have used it.
Mhm. Yeah, I mean, I think the part of like too good to be true might apply, but like if you go through it and actually do the research as you're mentioning, then like for the sake of saving money and like basically getting out of mortgages faster, that this is pretty relevant, you know?
Absolutely.
So Kevin, how would you like? I know, like there a lot of people they want to gain like greater certainty and control over their like financial future, but they don't really plan ahead or like they don't really know how to go about doing that. So from your perspective, how do we plan for the future and have like a sense of financial stability over the long term?
I love that question. It kind of ties back to what we mentioned a little bit ago when you were talking about paying it off faster. And what I encourage people to do is to have your house paid off by the time you're 62. 62 is the earliest somebody can get a reverse mortgage. Unless it's a jumbo million plus, then they can get it at 55. But we'll just say most people, it's 62. So what happens at 62? Now they own their house outright. It's the house they want to live in, they don't want to move from. Now they get a reverse mortgage. They don't need it per se, but they want, most people over time have a 401k or an IRA, right? Why? Because they want to grow their wealth over time to where they get to the point they don't want to work anymore, or they want to work less. Now they can live off their investments. How a reverse mortgage can play into that is, somebody owns their house outright at 62. They take out a reverse mortgage, but they continue working. And let's say 12 years later, for example, well, 10 years later, we'll say, now they're 72 and they have a line of credit that they haven't used with a reverse mortgage that has now doubled. So we'll go back to our example of $400,000 house. We'll say they can borrow 35% of that, which is about what, 167, right? Let me do
Mhm.
the math real quick. 400,000 times 0.65. times 0.35, 140. Okay, so now they've got 140,000 in this line of credit. It's growing by compound interest year over year over year. And in 10 years, that money could double if they don't touch it. Now they have 280 and they let it ride another 12 years. Now they're 84 and now they have $560,000 that they can draw on tax free that they can use however they want. What I ask people sometimes is, do you have long-term care insurance? Most people don't. I think 12% of the population does. I said, well, here's a way that you can self-fund your long-term care insurance policy. Get a reverse mortgage early, get a line of credit, let it grow, and then you can bring in help to help you bathe and cook and clean and run errands and whatever you need to do as you get older and you slow down a little bit and you need more help. But you can also use it. You don't have to wait till 84. You can use it any time for any reason. But the point is, you don't want that money sitting there. I did a seminar one time at a senior expo, and the topic was reverse mortgages. And this lady comes up to me. She goes, I'm not coming to your seminar because I own my house free and clear. I said, that's awesome. Only about 35% of people have done that. Good for you. I say, let me ask you something. When you were working, did you have a 401k? Yeah.
Mhm.
I said, why? Well, my company matched it and I wanted to grow my assets, my investments. I said, okay. And your home is worth how much now? 400,000. Okay, great. So you're okay not earning any return on that equity because that return on that equity is zero. I'm not talking about the appreciation. We only realize that when we sell a refinance. I'm talking about that equity just sitting there doing nothing. I said, what if we could put 35% of that to work for you, 140,000, that can grow by compound interest, 7% a year, insured, guaranteed, tax-free. She goes, okay, I'm coming to your seminar. So that's the power of, this is one example of how people can use it.
Kevin, can you elaborate a little bit more about compound interest when it comes to mortgages, so that like our listeners and audience can know like how powerful this is? Because a
Yeah,
lot of people do not appreciate the power of like compounding, you know?
yeah. It was Albert Einstein who said, um, it's the eighth wonder of the world, and you either pay it or you earn it. And you want to be on the earning side because, um, this is how lenders get wealthy is they charge us compound interest. But yeah, you want to, if in my example, if somebody can own their house by 62, get a reverse mortgage, they get about 35% today that they can borrow, and they just let that sit there and grow. It's like an investment account that you never have to look at or worry about. It just increases every month a little bit, a little bit, a little bit. So in our example, that 140,000 after the first year would be almost 150.
Wow.
They didn't do anything. They just took some of their equity and unlocked it so they can put a reverse mortgage to work for them. It's 160. Then the next year, 171.5, 183.5. So you see how it just compounds. It just grows over time. So
Yeah.
it's a beautiful thing if you understand it and you take advantage of it.
I mean, it's pretty amazing, and I would definitely recommend my listeners to like basically do more research on the subject because this can actually help them financially a lot, you know? But Kevin, like a lot of people are afraid of like a next economic crisis, like, kind of like how the 2007 economic crisis happened regarding like mortgages. They're afraid that in the near future there's going to be another economic crisis where the real estate and stock market bubbles will burst. So from your perspective, how should people go about looking into real estate in the coming 5 years?
Yeah. So, we have a generation now that are buying homes. They're the largest generation, 80 million, Gen Z. And we don't have enough houses. There's not enough housing. The builders can't keep up. So it's a simple supply and demand situation. There's not enough supply and there's more demand. The other thing too is um, interest rates are starting to come down, which helps affordability. We've got grant programs to help first-time home buyers. So I'd encourage people, buy a house as soon as you can, even if it's not your dream home. Just get in and start building wealth. National Association and their research found that a homeowner had a 40x higher net worth than a renter. 40 times higher than a renter. So the sooner somebody can buy and start earning equity or earning um, appreciation, the better. I don't see a correction happening. We've actually had one the last probably 2.5 years where the market's been flat. And I think as interest rates come down, prices are going to go up again. But I think there's just too many factors. The Gen Z buyers, interest rates are slowly coming down. Supply and demand are all factors that are going to keep the market strong. And then the other thing too, with a reverse mortgage, when somebody takes out a reverse mortgage, that percent that they're borrowing is protected. Let's say it's 35% from previous examples. That 35% can't be cut, frozen, there's no payment. So even if the market declines, that money is locked in, it can't be changed. So if somebody's concerned about that, if nothing else, they should get a reverse just for that to protect that equity.
Yeah, I mean, yeah, a lot of different people have like different ideas about like the coming about like the economy and all of that. But what you're saying is relevant, you know? And Kevin, like just to elaborate on that, like what were your thoughts on the 2007 crisis regarding like the real estate? Do you think that it could have been avoided if people had a better understanding of mortgages?
Yeah. I got in the business in 2004, and interest rates back then were what they are today, mid sixes. And what ended up happening is lending guidelines got too loose. Back then, we could do loans, people could state their income, state their assets. Sometimes they didn't even need to tell what job they had. And so you had people buying homes they couldn't afford. And so, you can do that for a time, but eventually it catches up with you, right? You eventually can't afford to make the payment. They got to foreclose.
Mhm.
So I actually blame, um, a lot of times people want to blame the mortgage industry, but we don't create the products. We just offer the products to the public.
Mhm.
We're not the ones designing these programs. And so you have Wall Street that is at fault because they were taking these loans and selling C bond paper as if it was A bond paper. That has nothing to do with us. You have lenders that were designing these programs. There was a 125 program out there. People could actually borrow more than their house was worth, 25% more than the value of your home. That's not a good idea. We didn't create that. I never even offered that to people because I didn't think it was good. But I don't think we're going to go there anymore. I don't think there's too much regulation, there's too much oversight, there's too many we saw the ramifications of those decisions. By the way, the government's also at fault because there's something called the Community Reinvestment Act, CRA. It came out in the 70s, and the government's been pushing for years to increase home ownership. And it's about 64, 65%, but it was higher in 2007, 8, and 9. And because they loosened the guidelines, more people could qualify. But historically, it's about a 65-35, maybe even a 63-37 of owner renter. And not everybody should buy a house. It's a responsibility. There's expenses to maintain it and upkeep it and things like that. And some people are content to rent, and that's fine. But if somebody if somebody has a desire to buy a house and they can qualify, they should do something sooner rather than later. And I don't think we're going to get back to 2007, 8 because too many too many regulations, too many guidelines, too many protections that can't happen.
Yeah, I mean, there's even like a few movies about that time period, like kind of like The Big Short, where because the thing is like a lot of people still don't understand like what exactly happened, like because the lingo that they used was so complex, and the terminology for mortgages and all that, like subprime, AAA, like all that stuff, it was just like it went over a lot of people's heads. But
Now that
yeah.
is a great movie. If somebody really wants to understand that period, those guys saw it and they predicted it and nobody would listen. And they
Yeah,
were right.
it was one of those like really interesting movies where this guy is going to make like about half a billion or like some large amount of money, but he is wondering about the moral principles of the country while that's happening. It was a very fascinating take on that time period.
Absolutely. Yeah.
Yeah.
I had a little PTSD watching it because I lived it.
Yeah, I mean, it was definitely like a very interesting moment, and I mean, it's almost like it's historical in a way, because it was not as bad as 1929 depression, but it almost got there. Had there been no bailouts, it would have been pretty bad.
I
Yeah.
agree.
So, Kevin, can you tell me, the audience, a little bit more about your book, "A Reverse Mortgage Changed My Life," and like the premise of what got you to write this?
Yeah. So, reverse mortgages have a bad reputation, primarily from 1961 to 1988. But there's people that even today still believe you lose your house, you give up title to your house. And so I just thought I'll interview my clients and share their stories. I don't know if you can see that, but
Um,
there it is right there. Reverse mortgage changed my life. And it's just stories of how it has helped them, what they did with the money, how it changed their life. The way I got the idea, Cosmos, was I went into the radio studio and I had a handful of clients come in and record a radio spot. And the theme was a reverse mortgage changed my life. And I left in tears. I thought, man, this is more powerful than I even knew when I helped them, because this is months later and they're coming back and saying this is how it's changed my life. And so I had that idea in the back of my head, and I thought, well, one day maybe I'll write a book. And so I started last May and just started interviewing people in the last couple of years who I helped, and their stories were very moving and very impactful. And so the idea was to share the book with potential clients, just to say, hey, this is how people the same as you, senior homeowners, have used it, and maybe it could help you.
so Kevin, what was like the common themes you noticed in all these stories, like from all these people that you interviewed?
Yeah, it's interesting because um, they come from all walks of life, from all over the country. Um, they're married, they're single, they're divorced, they're widowed, they're every ethnicity, right? White, black, brown, that stuff doesn't matter. But the common theme is they're afraid of outliving their money. That's
Mhm.
their number one fear. And when somebody can either eliminate their biggest expense, their monthly mortgage payment, or they have access to equity to use however they want, it just gives them peace of mind. I can't tell you how many people told me I sleep so much better at night. I don't have to worry about money. And it affects your health when you're worried and anxious and concerned all the time and stressed out. It's not good for your health. So I had a guy, um, we were out to dinner one night and he stopped by our table and said, I just want you to know you helped us go on a cruise last year. We're going another one this year. So it's all these things during our working lives we work for and dream of and say, one day when I don't have to work anymore, I'm going to go do. That's what allows them to do. Because we all have three buckets of money: wages, of course, that stops when you stop working, investments, and equity. And when people unlock some of the equity, it allows the other two to last longer.
Wow. I mean, yeah, like when talk about financial stress, like it is so relevant. It's one of the reasons why I do Extraordinary America, because when you have a certain level of financial stability and freedom, then it does affect every other part of your life. Money does play a big role, whether we want to accept it or not. But after a certain point, there are other things that matter. But when you're in the grind and you're living paycheck to paycheck, it does play a big role, you know?
And when I meet with people, I ask them, I say, okay, what are your options? You can stay here and do nothing. You could sell your home and move in with your kids. And they always groan when I say that because they don't want to do that. And their kids don't want them to do that either, by the way. And they love their kids, they just want to live with their kids. And then the fourth one is you can do a reverse mortgage, stay in your home, have enough money to do the things you want to do. And people make all those choices, and whatever one they choose is fine with me. Another one would be they can sell and go live in an assisted living home, which I don't know what it is in Florida, but in Colorado it's $8,000 to $10,000 a month. It's not cheap.
Mhm. No, I mean, yeah, having extra money or like saving money from these strategies is a big it is a big deal, you know. And which brings me to the next question, Karen. So how does my audience like connect with you and get to know about you and your work and everything you do? And like if they want to reach out to you regarding more information or help regarding their mortgages, how would they go about doing that?
I've got a couple websites that they can go to. If they want a traditional loan, heromortgageloan.com. Um, I help a lot of firefighters and police officers and veterans and teachers and nurses and things like that, ministers. And there's some incentives I give those people because they're giving back to the community. And if they want to get a reverse mortgage, my website is reversemortgagerevolution.com. And that's where they can get the access to the consumer guide as well.
Kevin, I'm so thankful and grateful that you took the time to come on this podcast and educate me and the audience about reverse mortgages and how they can people can save money with this, because these are like common sense strategies that ironically, like a lot of us we're not applying into like our homes, and we should start doing so. So I really appreciate that you took the time to do this, and I would definitely want you to come back on the show at a later time.
My pleasure. Thank you for having me, Cosmos.
Yeah, thank you, Kevin. I really do appreciate it. And I do want to tell my extraordinary Americans that, hey, look, there's an extraordinary America, like there's an extraordinary American within each and every one of us. And it's our duty to awaken it and unleash it. Until next time, bye for now.
Hey everyone, thank you for watching Extraordinary America. If you like what you see, please do subscribe to our podcast and share it with others. Remember that the best investment that you can make in your lifetime is in your own financial education, for it is knowledge that truly sets us free. Also, remember that inflation is diluting your purchasing power, which in turn increases financial bondage. The practical thing to do is to protect the loss of your purchasing power and invest in precious metals or the right cryptocurrencies. Lastly, never forget that you are an extraordinary American. We'll see you in the next episode. Bye for now.